Hello, my fellow investors. Although I deemed RMR companies as uninvestable, and I'm definitely not touching these companies, I invested so many hours doing research on this company that I wanted to continue to follow this company to see how it's going to play out through the next years. And I was so committed in this research, and I actually thought I found my best cigar butt in my investment career. And the only thing that stopped me was management. And when I went into look into management, I saw how corrupt they are. So that stopped me from going and investing in this company. But I want to just continue to follow it to see how it's going to play out in the next years. And I want it to be for me a very strong lesson to see how important management is. They just now reported the last quarterly report, and I would just want to show you how lousy this company is. So, first thing, this is the Q2 report from June 30, 2022. I just want to show you something small. Total shareholders' equity was $2.78 billion. That's in the second quarter. In the third quarter, it's 2.706. So in one quarter, the shareholders' equity went down by $83 million. That's just putting that out in front. Now, here's where things get really interesting. The occupancy rate is going up. So this is the SHOP portfolio, and as of the end of the 3 months ended September 30, the occupancy rate in the SHOP in 2022 was 74.7. And I'm going to point this out to see why this is so important. This is one point. The second point I want to show is the property expenses on the SHOP. So this is for the 3 months ended September 30. The total revenue from the SHOP was $258 million. And the property expenses was $264. So basically, I wanted to figure out the EBITDA of only the SHOP. And I don't care about anything. I just wanted to see one thing. Is DHC getting more profitable in the SHOP segment? Because the office portfolio was always profitable. The total revenue is $55 million. The EBITDA was 24, property expenses before depreciation, everything. And actually, before I put out my last video, I saw something which got me a little bit hyped that maybe the company is getting out of the pandemic. And I said I'll wait till the next report comes out before I show the investor these numbers, so they shouldn't get hyped up. And I was right not to display it because it's worse than I thought. So let me just show you the numbers. So I did here from Q1 2019, which is when they made a new arrangement with Aleris Life. And I put in only the residence fee and their operating expenses. I mean, this is basically the EBITDA of the SHOP segment. So I'm putting aside the office portfolio, putting aside everything. Only the SHOP segment. Is it getting better or worse? So in Q1, their operating margins, or we call it EBITDA, on the SHOP was 79%. And let me so what I did was, I did this thing. I took the total revenue from the SHOP, and I took off how much only with the property expenses. I didn't care about depreciation. I didn't care about anything else. I just want to see, is the company operating better? So this is how it looks for the last quarter from Q1 in 2019. So over here, the operating margin was 79%. The next quarter was 80%, 84%. This is getting worse and worse and worse. 84, 86, 86, 89, 97, 97. So basically over here, they're really almost not earning anything. That's EBITDA. Besides any other expense, besides interest, besides anything, only the revenue and their operating expenses. 99%. So basically, the 1% they earned. 96%, 99%. And over here is where it got really worse. They were losing 3% on the SHOP segment before any other expenses. And this is what I saw in my last videos that I posted, and I got a little bit hyped. It was the third straight quarter that things were becoming better. I thought the occupancy rate is going up, and maybe that's why DHC didn't get out of whatever you could call it that they're stuck in. So over here, the operating revenue from the residence fee was 234, and the expenses was 241. That's an operating margin of 100%. It means minus 3%. And over here, it already went down 3%. So a little bit better. The next quarter was already 97. So I thought, oh, finally, they're starting to get out of the pandemic. And then the last report, boom, 102%. 258 million was the revenue, and 264 was their operating expenses. We can see it over here. This is the 3 months ended September 30, 2022. This is the shop. Total revenue 258, property expenses 264. So I already thought finally they're getting out of it. No, everything went back to where it was. This is like the 103%. That's mean they were losing 3% in Q4 of 2021. A year later, 4 quarters afterwards, it's the same exact place, 102%. They're losing 2% on before any expenses. And the funny thing is, and this just shows how lousy this company is, the occupancy rate in Q1 was 71% of 2021. Q4 2021 was 71%. The last quarter is steadily going up, 74.7%. So they're earning more money, and they still don't know how to manage their company normally. Now, just for the sake of understanding how lousy and bad this company is, I'm going to compare it to Brookdale. Brookdale is, I think, it's the biggest senior living company in America. And this is the last report for Q2 2022. So you can see total revenue and operating income, $689 million. How much is the expenses? So this is facility expenses, excluding depreciation and amortization. Yeah, that's what we're looking for. Just the operating expenses, $689 million in revenue and $513 in expenses. That is a nice margin. And comparing it to DHC, which is losing money. And it's not as if Brookdale has a better occupancy rate. This is their last quarter. This is the occupancy rate we have over here. Q1 2021, 70, 72, 74, 74, 75, 76. It's pretty much the same like DHC, 71, 73, 73, 74. They're not much better. Maybe a little bit better, but not a lot better. And their margins are way better. That just shows you how lousy they are. They're more or less in the same occupancy rate, and they're losing money before anything. Only the EBITDA is a minus 2%. So this just shows how lousy the management is, and they don't care anything. And as I showed in the beginning, the loss in shareholders' equity was $83 million. $83 million in a company that has $2.7 billion. They could bleed this out for years and years and years. RMR could continue to get their fees. They don't care. And let me just show you over here. This is the last report from DHC. On June 2, 2002, in accordance with our trustee compensation arrangements, we awarded to each of the 7 trustees 20,000 of our common shares valued at $2.14 per share, the closing price of our common share on that day. On September 14, 2022, we awarded under our same 707,000 of our common shares valued at $130 per share, the closing price of our common shares on Nasdaq on the day, to our officers and certain other employees of RMR. So the RMR people are getting 707,000 shares at $1.30. That's over $900,000. They're getting paid. They don't care. So who cares? A company that has $2.8 billion in assets, it's going to lose every quarter $80 million, $90 million. So what? This could go on for 10, 20 years. They're going to be getting their $100,000 a year in their fees and the compensations and the shares. They don't care. They absolutely don't care. I don't see anything in the report that shows they care anything about the company. It doesn't seem at all. This company is just going down and down and down and down the drain. In Q1 2019, this is the middle of the pandemic, they had 79% operating margin. It's not good, but at least the shop is still earning money, taking off depreciation and expenses and interest. Okay, but the company is still profitable, and it just from Q3 2020. Yeah, that's 2 years ago when it was 97%. That means they're hardly earning anything, and the EBITDA, and nothing changed. Nothing. It's just getting worse. The occupancy rate is going up. The pandemic is over more or less, and nothing. That's a lousy company. That's a lousy management. They don't care anything about their shareholders. They don't care to earn money. They're getting their money in their pocket. That's all they care about. Thank you very much, and I hope you enjoyed this video.